Hi everyone, it's PK here from a very cold Brisbane morning. I hope you guys are well. I just wanted to talk today about strategy. So everyone talks about strategy in property investment circles. Start with strategy, start with strategy, start with strategy. Sorry about the background noise, by the way. But what does that even mean? Why don't we just hop on realestate.com or domain and get going? Why do we need to start with a strategy? So here's what a strategy really is. And this isn't everything, but this should give a really good start for you. And it's really important to have a robust strategy, answers to these questions to build a long-term portfolio. So the first thing is price point, right? So to understand which price point you want to buy the first property at, the second property, the third property, etc., we need to understand your borrowing capacity. Your borrowing capacity coupled with any savings you may have or existing equity you may have, those two things combined, will determine your total price point affordability. Now you may not want to max out that price point affordability in the first purchase, but it's good to know what you can afford. All right, so that's the first thing, price point affordability, excuse me, which is determined by equity or savings and borrowing capacity. The second aspect of your strategy then is what is your cash flow? So your household budget, and if you already have any investment properties or any other commitments, do you want your next property, the next property, the next property, to all provide you positive cash flow, to all provide you neutral cash flow, so not costing anything, not giving you anything? Or are you happy with negative gearing? Look, a lot of people look down upon negative gearing, and certainly it has a lot of disadvantages, but at the same time we shouldn't just say that's a bad strategy, because for some people, maybe not most people, but for some people it may actually make sense. Okay, so cash flow is the second element of your strategy, and that determines the yield at which you can buy properties, the next one and future ones. The next element of your strategy, or the third element of your strategy then, is your risk appetite. So we're all different. I'm just looking at the comments, I'm different to you, Troyson, you, Shay, you, Tiaga, you, Annie. We're all different. We all have our different sleep at night factors. So we need to understand our individual risk appetite. And that will determine and that will dictate exactly where you buy. Look, there are some really good locations across Australia to buy investment properties, but some of them have higher price volatility and higher upside, but also downside risk than other locations in Australia. So we need to really understand, would we be happy if this property was to fall by X%, even though it has the potential to rise by X plus Y%, okay? So that's a very individual thing. And then not the last thing, that's my son in the background, not the last thing, but one of the last things to look at in terms of strategy is how active or passive you want to be. Right, so if you want to be very passive, that's going to determine certain suburbs and certain properties that you should buy for the next property and thereafter. But if you want to be very active, if you want to be involved in cosmetic renovations, in structural renovations, in subdivision, etc., I mean, the sky's the limit, then that all determines exactly what you purchase next time, the subsequent purchase, etc. So for example, if you want to find a suburb where you can manufacture $50,000 of equity or $70,000 of equity through a quick cosmetic renovation, let's say something that costs you $10,000, $15,000, $20,000, then it may not be possible for you to buy that type of property in a super high capital growth suburb where an investor who is only concerned about capital growth would go. Right, so these are generalizations, but I just wanted to go through those 4 aspects of strategy development. There's other things, and underneath these 4 things, there's so many nuances. But I just wanted to give that overall sort of indication that don't just hop onto realestate.com or Domain, don't start looking for properties. There's a place you should start, and that's strategy development. Okay, well, hopefully that was useful. Have a great Saturday or whenever you're watching this, and feel free to comment below if you have any questions, or reach out to me directly and I can try to help you out. Okay, see you later, guys.